For our next speaker, we'd like to call on someone, of course, that everyone here is very familiar with. He will be speaking on the market with a view towards technical analysis. Without further delay, I'd like to introduce our Chief Technical Analyst, and if I may add, recently voted Best Technical Analyst by the Fund Managers Association of the Philippines, Mr. Juanis Barredo.
Good morning, everybody. How are we doing? Really bad? Is it because of an early day or because of the market? Well, I hope I can present something a little bit more rosy for you, but yes, we are in a condition today that the Philippine environment had to be able to temper part of its growth, and of course the market had felt this quite ahead of time, and that's the reason that we saw the market manage to be able to taper back. But at least you've seen from April's point of view that the long-term bullish approach is still very much intact. I will try to be able to show you the same when we look at some of the trend factors inside, although of course in the short term we do still anticipate a little bit of shakiness into the market, but let's hope that we can come around to get some traction at about this point so that of course that we can improve the ability for us to move on with the short-term upside. Now, I don't know if you've managed to have a look at the picture that you see there on the graph, and I don't know if you guys can share the same sentiment with me. In our environment to be able to grow, we've had a lot of obstacles in our growth, and many of those things you're probably feeling the pain of aside of the market, of course. We've had traffic problems, we've got congestion in terms of the difficulty flying in airports. We've got congestions also in containers coming into the harbor. We've also have a proliferation of malls and shops all over the place, and these things take time for demand to be able to catch up along with that and try to be able to put things in proper perspective. And that could also be the reason why we've managed to be able to feel some sort of downsides recently. You know, when it also reminds me that when we were in COL and we were growing, there was a time we were opening maybe 50 accounts in a day or maybe 70 accounts in a day, and at that time we were controlling the pace quite well, and all of a sudden that jumped up to maybe 200 accounts in a day, and after that we were already having problems on encoding, having problems putting it to the system, and we really had to build on the infrastructure, to be able to build on the support services to try to make things happen. I think that's what the Philippines is going through right now. And in our ability to scale into that next level, and I hope that like April said, the PPP projects are coming back into place and maybe a little bit more formidably to be able to deploy a lot of the funds necessary to keep growth levels quite robust. Like I said, we do remain hopeful that we are coming here towards the next presidential cycle. We think that the deployment of that will probably very much start before the next presidency comes along, so there is some hope of that being reignited. So again, shifting gears is really something that we've had to be able to look at in this point of view. You know, if you're riding a vehicle and sometimes you're trying to be able to change from one gear to the next, while you're switching gears, you run into this space where the car does not have any traction because you're shifting into that area, and we feel we're somewhere in that middle spot right now, and hopefully that we can click on and we can have these gears start to be able to catch up in terms of their momentum. Have the space bar, please. All right, so the Philippine Stock Exchange has pulled back from the highs that we've seen in the early part of this year. We've hit almost about 8,100 plus at one particular moment, and we saw the index drop quite severely back to the one-year moving average. Normally, when things go back to the one-year moving average, I mean, that is quite a bit of a worrisome thing to have a look at because it shows you the lack of momentum that it had, and its ability to be able to stand at this area right now is what we're going to have to be able to consider quite well. We are now winding into this area. Hopefully, that we've tested this low twice. Let's hope that it doesn't do it a third time. And if we do get to see a wider effort of support come in, then that should be able to put some sort of lift back into the market, at least into the short term. But we're watching that very closely, and we do have some headwinds to be able to consider. We do have the S&P 500, or the market in the U.S. going sideways. We do see challenges in the growth in China. Their stock market has had fallen down from 153% advance recently. We've had also some upward motions into the dollar because the expected rate hike. That's causing some turbulence into local currencies in Asia and also into some of the sensitive companies and commodities because of that. And these things may have to be able to play themselves out, and that's why I think investors are being rather defensive in their particular stand. So in line with that, I mean, we do have to temper some aggressiveness into the short term. We should be waiting for prices to be able to solidify their approach and support in areas where they currently are. Hopefully they don't fall too much lower from here. And in that ability, then this might be able to be an area for us to be watchful for better opportunities compared to where we came from maybe into the second quarter. All right, we'll have a look and see what other detail that we can anticipate. April did show you a version of this graph. This is just showing you how the Philippines had paired as compared to different types of markets. The graph on the left side shows you the one in green. That is the Philippine Stock Exchange Index performance, which is roughly up about 3.5% so far as of the year-to-date value. Then we do have the below that, we do have the S&P 500, the MS World Index, and of course the Morgan Stanley Emerging Market Index as well. And you can see that all of them have actually performed a little under the Philippine index. So at least that we're still up there in terms of performance. But it has been quite a bit of a shave down because if you notice in the first quarter, we were market number 3 and now we're market number 5, as you see there in the image on the right side. So clearly, yes, there have been some changes, but if you notice some of the changes you do see over there are really from very striking markets like, of course, we had China, which is up only about maybe 19% now, but like April pointed out, it was up about 150% earlier on. Japan was also very strong, and South Korea also managed to be able to pick up somewhat. And there's been quite a bit of a shift because some of the currencies involved in these companies have also, these nations have also been quite volatile. If you look into the middle and to the right side, you can clearly see that there are markets all the way through that have been quite underperforming. So we do have Malaysia, Thailand, and Indonesia, so of course, as April pointed out already. And I think I would be extremely glad that we were not on that camp as of the moment because that could be quite a bit of a hurtful exercise, and it might take some time to recover from that. Next, please. Okay, so going back into the Philippine Stock Exchange Index, we'll take a medium to long-term view here. And one of the concerns that I've had, at least recently, is that the index managed to break below a trend line, which we've been watching since 2014. Breaking from an uptrend line means that your index will either now attempt to go sideways or may attempt to go a little bit more lower. So far, it's managed itself sideways, so I don't want to be pointing down too much until it's time to. And right now, we're watching the consolidation to be very, very intent. It's held up in its two lows, closer to 7,272 so far, and that will be the range to watch. Let's tag this for the meantime as our center, and we hope that this particular center will hold for the meantime to try to support prices. Looking at this in a shorter period of time, so this is the index. Given the high that we saw in April at 8,000, about 8,100, we've seen that index come back down to 7,272. And if you see there on the right side, I've enclosed it in a blue and red line, and that is the current consolidation range that we're currently trading in. So the low side is about 7,272, and the high sides of that range is about 7,665, being the next level of resistance we have. So there's only two ways out of this. I mean, the first condition that we can have is a more positive verb, and this is what I prefer to be able to see. So this is more optimistic. And what we want to see is we want to see an eventual push off above this consolidation range. And preferably we see right now a higher low at about the distance that you're currently seeing over here, which is very important. And if we can hold this where we've so far held in the last 3 days and managed to be able to work back to resistance, that should be able to give us more stimulus to try to be able to continue upwards with that particular path. So this is what we need to see. This is what we need to be able to engage in that can allow market into the short term to fix its consolidation phase and try to work up with a little bit more better upside. Now, what we have to face the reality of is that there's a potential for this to do, could I have the change, please? Okay. Is that what happens if resistance fails? And we are not able to make a higher low here, and we see prices come back down to the lower end of that consolidation band. Well, this is where we're going to have to be able to put our thinking caps on again and try to anticipate that just in case this low range breaks, there might be a little bit more downside action. Now, I don't think it'll be a whole lot of difference in terms of the values, but there could be a little bit more downside just in case these levels of support of 72 manage to be able to break. Oops. All right. So I wanted to see how strong a holding power we might have here. So one of the guides that I managed to be able to use to take a snapshot of the current market condition is a guide that we use called our technical guide. Our technical guide looks at a list of 167 companies. And inside that guide, I wanted to see how many of these particular companies have been trending down or have been trending sideways or up. And if you can see from the list that we do have over here, about 126 of them are trending down right now. And so that means that there is quite a severe amount of weight, at least in the short term, and it's because of that that we have to be very cautious into the market, assuming that these particular levels continue to be able to flay downwards. And so the index must try to be able to wind up here a little bit more. It has to give time to some of these issues to try to recover, and particularly it has to be able to be breaching a lot of the resistance zones that have been keeping prices quite struggling in recent times. So yes, we do have a challenge up ahead, and we got to knock this down one by one. Now, on the longer term perspective, next please. Let's deal with the long-term view of the market. Let's start from where the bull market began, which was back in 2009. This is after, of course, that we've noticed some of the crisis moments that came from the United States. Our market managed to be able to start to push up. And a long-term trend line, as you see from the picture there on the left side, is intact. So yes, I agree with April that the bull market is still very much there. The problem is that we went from an index value closer to about 5,006 or 5,007, and we climbed up to 8,100 in relatively a short period of time, and that overbought condition managed to be able to ask for a correction. Now, while the correction came in, we were surprised with the slowdown in growth. GDP numbers weren't as attractive. PPPs didn't get pushed out as fast as they should have. And because of that, adjustments have to be made. The index made quite a bit of an adjustment to try to be able to factor that in. And that's a reason that you're seeing that index attempt to head back. So you cannot remain at a very aggressive stand when your growth projections are being tempered. So now we have to temper prices as well. Now, are we still into the bullish front? The Elliott wave cycle, this is a typical bullish and bearish cycle that you would clearly see. And I believe that we're currently on the fifth wave of that Elliott wave. But I don't mean that we are already on the end of it, but we're still continuing there. Although, yes, we're suffering from a correction right now. And as long as this blue trend line that you see here on the left remains open, then we should not be changing our forecast to a bearish one until we can see that the necessary support structures are violated. So we're still quite bullish into the trend because we have no major cracks at least as of yet. If we do see any changes from that, obviously, then we will write letters to be able to inform you about what particular changes would be and what our necessary changes in support targets will be as well. Now, another thing that I've also been going with you for quite a few sessions now in the last so many every mid-year briefings that we've had is I've been following a particular pattern of movement into the Philippines. And I've noticed a remarkable similarity to particular incidents that had taken place back in 2005 and 2006. In 2005 and 2006, this is the graph on the left side, you're here looking at a particular significant way of how prices orchestrated in advance. And it's very striking that we've had a 5-point pattern here, a consolidation, a big up move, and then a sudden big drop happened way back then. In fact, I've been using this and I've been forecasting what's been happening to our market recently, and we seem to be following along the same path. And if we continue to do so, there will be a position that after this sell-off is finished, maybe, who knows, maybe here, maybe one more, but after this is done, the market's ability to resuscitate will still be there. And that's why, of course, that we feel quite optimistic that there is still the ability for us to do that. Now, whether it's going to go into a new high or not, well, I guess that would remain to be seen into the short term because, of course, we have to be a bit more temperate in our views now, given, of course, the changes that April managed to be able to point out to you. But again, that is still quite hopeful. If you also look at this particular example, Here's another example that I've also was using. This was an example played out in 2010, 2011, a little bit more in the shorter term component. And if you look at the similarity again with what we're doing here is we saw a decline, consolidation, another big decline, a base out with a double bottom and a higher low, and then we see prices spike back up. And I feel if you're looking at our current market, which is the one that you see there on the right side, that we seem to be standing on the same image. So it's quite possible that we could have this opportunity for the market to be sold off after these adjustments are being made. A lot of analysts right now have been downgrading because of the slowdown that they've seen, and they're trying to be able to play catch up with this little correction. But you see, what was this correction all about? The correction that we've already seen is because these changes were taking place. Remember, markets move ahead of reality. And since they're moving ahead of reality, they've already fallen down. So I don't think after some curve down into some expectations that you'll have perhaps too much more of a downside. There might be a little bit more, but maybe not too much. But the opportunity for markets to bounce might be there in case the surprises do come out, especially if the PPP spending results in quite added value. And of course, if April's projection for maybe hopefully a better second or third quarter GDP comes to be able to manifest. Next, please. All right, so in summary of that, the Philippine Stock Exchange Index currently drives a sideways pattern. We are challenged by support right now. We're keeping a very close eye on it, and we hope that a higher low is generated here to be able to provide extra lift. Yes, we do see that a whole bunch of issues are still pointing downwards, and that's why this market's going to have to deal with that point by point. There are clearly weak sectors. And later when we look at them, we'll just have to be a bit more cautious in those, a little bit more perhaps bullish in the ones that are still showing quite good earnings stream and much more demand following. So we need a higher low at present levels to be able to establish this. If you're asking me, can I go all out buy into the market right now? I would say maybe not yet. If this market is able to show you that it can pick up and the legs are clearly there and making higher lows, then it might give us some room for a little bit more trading opportunities. And where the market finds support will call out the potential rebound ability of a market. If we see the lows here and it does not break below 72, then the potential recovery, looking at least into the next 6-month period, could be off to maybe 7820 or maybe back to 7900. All right? Just in case the 72 breaks and it falls back down, I'd feel the next major support from there would be closer to 7050. And if that index level is hit, a rebound from there obviously cannot go back to 79. It'll be a little bit more temperate. So what will happen is perhaps it might make a little bit more of a recovery looking maybe closer to 7460 or maybe even 7600. So we're going to play it by ear to see where the market managed to find a foothold, and we will make the necessary adjustments on upward projections once we see the established level. Next, please. Okay, just very quickly, let's look at some external factors that may affect our market. Number one, the United States. The S&P 500 has moved into a more sideways path rather than an upward path, but is currently testing the low end of that particular range right now. That means that it's going to force a situation into the US to make a decision any moment. So I think we should be quite watchful. I'm a bit more optimistic in the US because the mere fact that they're willing to raise rates and tells us that the economy is managing to be able to show more incentive, and that's the reason why I feel a bit more optimistic. We've been watching earnings. They've been quite scattered, although the tech sector looks quite promising, but there are some traditional businesses that are holding them back. So that's the reason why you've seen that the S&P has managed to be able to go sideways. So this has to hold over 2050. A break below 2050 in the S&P might cause some problems also with the rest of the world. Next, we do have China. Wow, I haven't seen rockiness this much in recent times. As you can clearly see, at one point it was up 153%, looking from sometime mid last year up to the high that we saw. And of course, it turned around completely, and we didn't see prices falling back down. Government is trying to do whatever it can to try to support prices, but right now, markets are still quite edgy because of the impact of what the slowdown in China's economy can do and how it will reverberate to the rest of the world. I don't think the choppiness is done. I think there will still be some movement there, and the mere fact that the government still has to put their finger into that button means that there is pressure coming out and they're trying to be able to manage it accordingly. What's nice to see is that at least there is a controlling agent that's preventing things from just falling down on its own. All right, so hopefully that the volatility might not be as tremendous as what we saw initially, but I think it might take some time to be able to unwind all that buying that they will be taking up. So do expect some choppiness still into the Chinese market. Next, we have, of course, the US dollar. I feel this has been quite significant because the expected rise in interest rates have pushed the US dollar higher. And because of that, a lot of currencies, particularly in Asia, had to be able to make adjustments, and their economy had to make adjustments. It's really also because of that we've seen quite downside activity in some of the Asian markets, except maybe for Japan, because Japan likes it that way because they're a more export-oriented particular country. Now, right now, the dollar, I think, has slanted a little bit sideways from its very, very aggressive stand because of recent overbought levels, and I think it'll probably try to be able to groom within this area. If they do start to increase interest rates in potentially September or December, maybe even both, then perhaps that there might be the ability for this to stay relatively strong as compared to the other currencies. Next, please. In terms of the Philippine peso, well, I think there's some room here to be a little worried because we did break over a key area. After the peso moved over 45, and that was a significant resistance zone, it looks like an upward channels path is currently ongoing here, and that would forecast the peso to be able to slide a little bit closer to maybe 46 pesos. Maybe if we're being a little bit more exaggerated, maybe even all the way up to 46.50, but I think 46 is a tough area to try to break. So I don't think that it'll slide as many of the other Asian countries have managed to show. I think we're much more controlled in our fashion in terms of doing that. And that could also be why our market has not been underperforming like the rest of the countries like Indonesia, like South Korea, and of course the other ones that have been hit recently. I'm looking at a support range at about 45 currently into the short term, high side of about 46. In terms of commodity prices and taking from what April mentioned to you earlier, yes, there's been a massacre, if you'd like, in commodity prices. You can see here the price of oil in the world market had fallen back. It's currently at $46 per barrel. We have gold prices also really falling out, and copper the same. And please understand that gold and copper are two different types of metals. You don't usually look at them at the same light. Precious metals is usually looked because of inflation, and the other one is really because of the industrial capacity of a particular country. Since both of them are falling down, and I would assume part of that is the dollar to blame, that's forcing these things to come down, but there also is because of the slowdown in some growth prospects for countries like China. That's what's also been hurting the growth aspect here. So yes, I've been quite negative on the mining sector for the last 2-3 years now. I've not changed my mind. And I know some of you have been asking me, can we buy mining? Can we buy mining? Can we buy mining? I guess you tell me why you should. And I guess let this be the one to be able to make you make up your mind. Next, please. All right. Let's look a little deeper into the Philippine scenario. How has this reaction fared, and which were the sectors that seemed to be outpaced in terms of strength, and which one were underlyingly weak? If you see the graphs that you see above you, the stronger sectors seem to be those coming from the conglomerates or the holdings companies, and of course the property sector. So these are the ones that seem to have taken a good stride, this reaction that we're having. They've still managed to hold on at a very good level of support. So I would expect that some of the picks that you should be looking at should be centered in these first. Second to that, we do have services. There's been a recovery from PLDT. Globe has actually been doing quite well. And although April doesn't look too nice into the telco sector right now, there has been some telltale signs of a little bit more of support holding, and if not selective strength. So there could be some opportunities here, but maybe not strikingly so. On the weaker side, we have the commercials and the financials. This seems to take very much in tandem what April said earlier on. We've been seeing weakness in some retail consumer stocks, and I think that's quite clear into prices breaking through major moving averages. Banks have also been hit quite hard recently, and also that was quite clearly pictured because they seem to be in the same boat as the commercial companies. And the worst of that, as you probably guessed, is yes, the mining and oil sector. Right? All right. So in terms of what we do, to position ourselves into this particular period, traders will really have to use several concepts to try to be able to gear on or to focus on the right aspect of the market. If you are able to spot out strong movements in certain, whether it be industries or stock-specific companies that you do have there, please make sure that the companies that you're looking to be able to engage in, particularly in the short to medium term, are still trading above their 130-day moving average. This should be able to give you better support power and ability for it to generate some lift. Okay? If we do see things that are or we've seen recent short-term declines, but the declines from the major highs have not gone over maybe 8% or 10% lower, and these are still qualified issues that can still rebound quite well. But if you've seen them gone down more than 8 or 10% than their highs, then something is underlyingly weak in there, and we might have to be able to take our time in trying to pick these particular issues off. Of course, MACD should also be quite positive. We want them to be able to tell us that there is momentum or upward momentum in these particular stocks. And please try to make sure that when you're buying these corporations, we don't have to be aggressive in today's market. So wait for prices to come down to short-term support, let them rebound, and that's where you come around to be able to buy them. Please stop chasing prices moving up very quickly, right? At this kind of market that's not very aggressive, we can easily get a bloodied nose by chasing prices. So allow prices to come in. Give time for yourself to be able to pick prices out at more reasonable levels. Second, if you're looking to be able to buy companies that are falling down, I mean, I think if some of you have looked at graphs like Banco de Oro, which actually has fallen down quite a bit and quite a number of different issues, please remember, try to qualify what you're buying. There is a reason why these guys are falling down quite fast. And because that underlying reason has not changed, I don't think that the rebound component will be very, very striking, at least not yet, not until proper reversal prospects have actually been shown. So take your time with these ones. Don't be too aggressive buying stocks that are just falling down. Remember, ask yourself, is there something a bit more long-term or medium-term that is going to pain this particular company? If the answer is yes, then don't just be an all-out buyer into that on any just particular drop. So try to be able to weigh it out. Try to stand away from companies that have fallen below their 1-year moving average or their 260-year moving average. All right? So off the bat, just filter that out for the meantime. Once they recover above that, we can look at them again. Also try to make sure that when you're buying defensively in a market like this, just remember, any spike down doesn't automatically mean a buy, all right? So try to reason that out as to why that's taking place. Do expect some choppiness because buying companies that are trying to make reversals usually take time. Remember, a downtrend does not become an uptrend immediately. A downtrend goes sideways first before they go up, all right? So it takes time to change the point of view of the people who are moving into that particular market. All right, and it's very common that you would get support retests along some of those, so I think you'll have time before these things will probably just eventually run away from you, which I don't think they will do. And of course, please understand that all these things are all managed by support areas. So if our short-term support areas are broken, we may have to be able to adjust our support targets down. So if some of you are trading into the short term, you might want to lighten first and look to buy back when we see the next level of support, attempt to hold better. As a review of April stock picks, so we took a look at some of those issues you have, and well, I would say half-half right now. The technicals are in half their favor, some of them are not. And right now, the ones that seem to be more in good faith to the technicals are Cebu Air, Philinvest, perhaps even a little bit on Metrobank and SM Prime. Right? Ayala Corporation and Ayala Land do have a little problem to the short term as they're moving sideways, but the others seem to be doing quite fairly in my assessment. I've also indicated the necessary support and resistance zones there on the right side, so many of you can establish your trading windows. Now, I'll have a look at 10 issues that I've seen to be technically strong, except maybe one that I will show, but I put it there for an aggressive reason. But let's have a look at some 10 companies that have or that are currently carrying quite strong technical weight. The first one is Aboitiz Equity Ventures. If you've seen there, we do still a general up move, but it's been interrupted, a very lengthy sideways movement. It's currently challenged by resistance closer to about 59 or 59.20. If it can break over this, then there could be another potential upside for this, so it's something that we should try to consider. Again, in all the graphs I'm about to show you, I will recommend that you buy closer to support and not just be buying as prices jump over resistance and do so quickly. All right, so try to be able to buy closer to support so that we can control our entry and we can control our risk. Next, we have Double Dragon. I will not be a buyer in today's price action. That's been quite lofty. And so we need prices to be able to settle down. If you notice, the RSI values there on the right side are a bit overbought already. So I think a consolidation is in order here, or maybe a reaction, and that should be able to prompt in a better entry point for you. So just be a little bit more careful. I would like to take some profits here and wait for prices to be able to quiet down. Next, please. Then, of course, we have Cebu Air. I think we've been a long-time promoter in this company so far. If I could put two eyes there, that would look like a smiley face to me. And this particular airline, I mean, I know since its IPO, it's not really done too well, but we've finally been seeing some lift in this particular airline, and we've seen this consolidation manage its way through, and prices are now back at resistance. So it might need to wind up here a little bit, but we're still quite fond of it. The technicals look quite strong, so I'll be a medium to hold, long-term hold on this particular stock. Short-term, if it goes over its 94.45 area, then you might have a short-term upside to 99 or 100. Okay? Above that, the next target will be 108, about 110. Finally, we also had a new kid on the block, Crown Asia. Crown Asia seems to be doing well. It's been climbing up into an upward channel. The low price of that range is closer to about 246, so that is, I guess, a better area to be able to look at for support. And immediate upside targets are cast closer to perhaps about 294 to 3 pesos per share. Okay. And of course, DNL. Yes, I know this price currently is expensive based on our investment guide's target price. The fair value is lower than the current cost, but the technicals seem to be holding quite well. It's recently broken above that particular range, although there was a bit of a sell-off in the last day of trading. But I feel quite optimistic with this. But again, please look to be able to buy it in the lower end of the range. Support is closer to 2074. So if an opportunity comes to maybe between 21 to this level, then that might be a better area for you to have a look at. Okay? Potential target of about 2470. GT Capital is also holding out quite nicely. And of course, we've had a bit of an uptrend there, very clear. So prices are a little bit on the high side of that current range, and I'm anticipating resistance closer to 1420 or 1,420, with support looking closer to about 1,356. Another strong company, technically, has been Meralco. Oh, yes, there could be some mixtures in terms of the fundamental conditions over here, but I'm a trend follower, and right now there seems to be a buying demand for the particular company. It's currently being weighted at 300 because there's heavy resistance there, but if it can come around to be able to push above that, then there might be some continuity action here, looking next at about 316 pesos. And we also have SM Prime. SM Prime has been quite a very, very strong mover, and perhaps could also be aiding the fact that the index didn't really do too badly because of what it's managed to recover. It is also in an upward channel. Target ranges from next would be about 22 to the next level about 23.36, but major support is closer to about 20.5 or 20.50. And finally, the last two, we have URC and Zerpass. Let me talk about Zerpass first. Zerpass also looks quite nice. It's currently in an upward channel. Support range is closer to 1138, looking at upside targets of about between a range of 1250 to 1288. And finally, I included Universal Robina there, only for those people who want to take a little bit more excitement in their life, because this is currently still into a short-term decline, or maybe it's grooming sideways now. But just in case it manages to hold here, because you can see that there's been quite a bit of a higher low so far. And if it can muster on that, because we've seen prices tightening into this range, a potential push up from here might be able to have a little bit more of a wider recovery, looking closer to about maybe between 195 and hopefully to about 212 as a potential target. Do remember that this is in an industry that the fundamentals are not really very strong right now, so there is some aggressiveness that you would put in here in case you attempt to be able to do it. So please make sure that you follow your stops. Your next level of support here is at 180, so anything lower than that, and maybe we can just lighten up on the positions at least for the meantime. Okay, so in summary, we feel that, of course, there will be a position right now for the market to try to be able to put some dependence on this support level. If it holds at this particular level, then all then fine. We've had the market come back down already from the 8,100 range, and we're showing some volatility now. Hopefully, that can lead up to some gradual increase in demand. If 7272 holds, then the possible counter rally could be moving back into the ranges I talked about earlier on, maybe closer to 79, hopefully a little bit higher. But I think the market will get stuck in a very wide range for the meantime. Okay, because since we have to wait for demand to come up, hopefully we can see some changes in our next meeting so that we can inform you about it. But right now, I think the market might get locked up in a very big range. Now, if it breaks below 72.72, then that means we're going to have to adjust support down a little bit. We looked at about 7,050 being the ultimate target for that. I really don't see an immediate need for that level to break or somewhere thereabouts, but I think market should be able to provide much stronger support if it manages to be able to reach into that particular area. And of course, we have to watch out for the particular undercurrents in the market, certain headwinds. I did talk about the consolidation into the US. We also talked about the volatility in China. We also looked at the strength of the dollar, and that's affecting some local currencies, including ours, and that's what's been causing our devaluation. And of course, the volatility in currencies and commodities are going to continue. So again, as an overall strategy, when you look into buying this market, try to be able to make sure that you're not aggressive in your stand. Wait for prices to come back down to clear support levels before you start picking them up. Take your time. This market's not about to run away from you, okay? And we want to be able to see a higher low, preferably in our index, to be able to generate much more sustainability and demand. So don't be just jumping in on any issue running up. I know there are some small caps have clearly went your interest. We've seen quite advances into Go, into MIC, into AR, and etc., all these other small issues. So if some of you are keeping yourself busy trading those stocks, go ahead and do so. Just make sure you wear your parachute on just in case something happens. And of course, let's just make sure that for the mainline issues, we temper upside expectations because of the tempering growth concerns that was earlier talked about. But clearly, I still feel quite strongly about the overall market. Long-term trend is still very much intact. We just need to finish this adjustment, and after we finish it, it should be able to prepare you guys for looking to pick out companies, again, at very good prices. So with that, ends my talk. That I hope that we've managed to be able to provide certain conditions for you. Again, for those of you who still don't know that we do write technical analysis reports, we do have 2 products out there that you can find into our website. You can also look at our Bullseye report, which we publish on Mondays, and we can also look at our technical guide, and it should give you a good wrap-up of short-term considerations for the companies that you're getting ready to be able to pick on. So with that, I'd like to bid you again farewell, but again, thank you again for listening to us. I have hope that we've managed to be able to help you in considering your activities into the short term. With that, have a good day, everybody.